In this section, we're going to look at examples of operating activities for a company. Whenever you see these type of activities occurring, they belong in the operating activities section of the cash flow statement. Collecting cash from customers is an example of inflow of operating activities. Inflows are cash coming in, outflows are cash going out. So collecting cash is inflows of operating activities. Paying salaries and wages, that is an operating activity. That is an outflow of cash. Paying operating expenses such as rent, utilities, advertising, things like that are also outflows of cash. They're operating activities. Interest. Whenever a company pays interest, that's an outflow. Receives interest, that's an inflow. Both belong in the operating activity section. Receiving dividends is an operating activity. However, note that paying dividends is not an operating activity. Only receiving dividends is considered an operating activity. All these would be examples of operating activities for a company, and those would be shown in the direct method of the statement of cash flows. So if you look at the direct method of the statement of cash flows, you will see those items listed out separately. The format of the indirect method looks something like this. So we'll start with net income. We'll have adjustments to reconcile net income. Again, don't worry about what these numbers are at this point. All I want you to be aware is what is considered an operating activity. When you look at the statement of cash flows, we said we had two methods, the direct and the indirect method. They both arrive at the same dollar amount of cash provided by operating activities, but how we arrive at the number is what's different between the two methods. So when you are working on questions for your problems or exams, some of these things that are there in the indirect method may also be considered a part of operating activities. Let's look at these 5 items. Depreciation expense. Depreciation expense appears in the operating activities section when you're preparing the indirect method of statement of cash flows. The other two, amortization expense and depletion expense, you may not have come across them before, but amortization expense and depletion expense is just like depreciation expense. You know that depreciation expense is when we allocate the cost of an asset over its useful life. The expense is called depreciation expense. Amortization expense is just like depreciation expense, except we amortize intangible assets. Depletion expense is just like depreciation expense, except we deplete natural resources. So whenever we look at amortization expense and depletion expense, they're very similar to depreciation expense. It's just we're looking at different type of assets that we amortize and deplete. The other two, gain on disposal or sale, or loss on disposal or sale, is also something that belongs in the operating activities section when we are preparing the indirect method of the statement of cash flows. Just be aware where these belong. That's all we need to know at this stage. How to prepare the indirect method we will take a look at in a later video. Now next, let's look at investing activities. What would be considered an investing activity for a company? As a broad definition, an investing activity is whenever a company buys or sells long-term assets. So if a company buys land, buildings, vehicles, machinery, equipment, furniture, or sells these, it would be considered an investing activity for a company. If a company has long-term investments, including buying common stock of other companies, that would be an example of investing activity for a company. If a company buys common stock, there will be an outflow of cash from investing activities. And then if they eventually sell that common stock, there would be an inflow of cash from investments. Lending money to other companies is also considered an investing activity. Whenever a company lends money, that's an outflow. When those companies pay the money back, that would be an inflow. Again, all these are examples of investing activities. Finally, let's look at financing activities. Examples of financing activities for a company include issuing common or preferred stock. We've talked about these before in previous sections. Purchase or resale of treasury stock. Remember, treasury stock is when a company buys their own stock back, holds it for a while, and then resells it. Paying dividends is a financing activity. Recall that a financing activity is anything to do with equity or long-term liabilities. So any cash transactions relating to equity or long-term liabilities belongs in the financing activities section. Well, dividends are paid to stockholders, which is equity. Therefore, paying dividends is considered a financing activity. Obtaining a loan or paying a loan off are both examples of financing activities. Finally, let's look at issuing bonds or paying off, which is also called redeeming these bonds. You may not have covered the topic on bonds in your accounting classes yet. Bonds are a source of financing for the company. Basically, what a company does is they issue bonds, just like issuing common stock, except bonds are instruments of debt. So the company issues bonds and the public will buy these bonds. In exchange, the company will pay the bondholders periodic interest, and after a period of time when the bonds expire, the company will redeem these bonds and pay off the bondholders. Typically, bonds are long-term debt, and therefore they belong in the financing activities section of the statement of cash flows. We just looked at operating activities, investing activities, and financing activities for a company. There is one other section that we're going to look at next. We haven't really talked about it yet, but GAAP requires certain type of non-cash activities to be reported along with the statement of cash flows. The type of activities they require to report are called non-cash investing and financing activities. So this is basically whenever a company exchanges either an asset or a loan to another type of asset or a loan, or exchanges an asset for equity or a loan for equity. So basically lots of different types of exchanges is what we're looking at. Certain examples: if a company buys equipment, but instead of paying cash for it, they purchase it by obtaining a loan from the bank, and it's a long-term loan, that would be an example of a non-cash investing and financing activity for a company. Again, when we say equipment, it could be any other long-term asset. Another example is if the company buys equipment, but instead of getting a loan, they issue stock and a person gets ownership interest in the company for financing that equipment. That would be also an example of non-cash investing and financing activities. If a company has bonds, remember bonds are instruments of debt, but the bondholders agree that their debt should be converted to ownership, the company will convert bonds to stocks, and that would have to be disclosed in the statement of cash flows. And that again is an example of non-cash investing and financing activities. All these are type of activities that you would find in the statement of cash flows, and for your accounting classes you need to be aware whenever you see a particular activity where it would fall in the statement of cash flows. That's it for this video.